In India, the price of gold has been on the rise. Same time last year, 10 grams of gold cost 35,000 rupees. Today, it is 47,000 rupees. So the price of gold is increasing. It's an indicator of what else could be happening in an economy, of which three things are important. Number one, growth of an economy or lack of it directly impacts the price of gold. When the economy slows, the price of gold goes up. Let us see whether this holds true by taking the example of the global recession of 2008. The US economy, which accounts for about one fourth of the world economy, was badly hit too. In 2008, GDP plummeted to minus 0.14% in 2008. And till 2011, there was no significant growth. So when we talk of an economy slowing down, we are talking about a lull in the markets. No say. Without much economic activity, the share prices of companies eventually fall. Let us take some numbers of the performance of NASDAQ, a major stock exchange in the US. In 2008, the NASDAQ annual change, composite annual change was minus 40%. The stocks did bounce back a little the next year, but only to come down to 16% in 2010 and minus 2% in 2011. So what do people do? Instead of buying stocks, shares, real estate or any other assets, anyway their prices are falling, so they buy gold. So the increased demand for gold increases the price of gold. In 2008, 1 ounce of gold was selling at 700 US dollars. It kept on increasing, and by 2011, at the peak of the recession, the price of gold was almost 1,900 US dollars per ounce. So when an economy slows down, when stock markets crash, the gold prices go up. Our GDP is steadily declining since 27. It was 8% at that time, now it is less than 5%. No wonder the price of gold is increasing in India. And the second factor is the US dollar. When US dollar grows strong against a local currency, the price of gold in the local market goes up. The reason is very simple. US dollar is the most preferred currency in the global trade. India imports gold. So about 800 tons of gold are getting imported every year. So we need to pay to our sellers abroad only in US dollars. So the value of one US dollar was about 70 Indian rupees last year. Today it is 75, an increase of 5 rupees or roughly about 7% this year. So we need to shell out more Indian currencies to buy the same amount of US dollars or to buy the same amount of gold. So when we pay more for purchasing the same amount of gold, we charge a higher price while selling. So when the US dollar goes up against Indian currency, the price of gold follows suit. The third factor is inflation. Inflation means general increase in the prices of goods and services. Another way to define inflation is the decrease in the value of the local currency. When the value of local currency goes down, people, to prevent the value of their earnings from further erosion, they start buying gold. They know the ability of gold in beating inflation. One example, in 2000, a nice single bedroom flat in a decent location in Chennai would have cost about 5 lakh rupees. Because at the same time, 10 grams of gold was selling at 4,500. That means 1 kilo of gold was about 4.5 lakhs. Very close. And after 10 years, the cost of a kilo of gold was about 18 lakhs, while the price of a flat was about 15 lakhs. You could buy a flat by selling 1 kilo of gold, even in 2010. And what about 2020? Now the price of gold, 1 kilo, 40 lakh rupees. You could buy a nice flat at this price, 30 lakh rupees. That means, whatever be the year, the price of one gold would be enough for you to buy a nice single bedroom flat in a good city. Not only in India, anywhere in the world. That is how gold beats inflation hands down. So when people buy gold as a hedge against inflation, the demand goes up and the price of gold also goes up. So inflation goes up, price of gold goes up. In India, inflation is going up. It was around 2.5% in 2017. Today it is over 7.6%. I mean, last year and even this year, the trend only continues. So when you think of gold price, think of its relationship with, number one, the economic growth or slowdown, valuation of US dollars, and inflation. Thank you so much.